we're staring down at a scenario where rates are going to be high for longer, or even potentially higher for longer. What is the impact of that, though, sir, on an economy in New Zealand that is in recession?
So, our central projection is that it stays where it is, but for longer. I think that's important. We are, all things going well, inflation is back between the 1% to 3% band by the fourth quarter this year. And then at that point, we'll be able to start easing interest rates. So that is our central projection. Looking forward, GDP growth for this economy is at its lowest point as far as we can view through our projections. We see the quarterly growth rates of GDP picking up from here in New Zealand, but still leaving a negative output gap, still a disinflationary environment. So we see economic growth around 1% this calendar year, picking up to 2.5% and then 3% over the next couple of years. So, darkest before dawn, this is where we're at. We see inflation coming down. We're very pleased with that, but we just don't want to call victory too early.
All right, fair enough, Governor. And you've had the OCR over in a cash rate at 5.5 for 7 meetings in a row now, right? Your economy is in recession, I know, and you've just recently been quoted saying that, look, a lot of this, not all, but some of this at least, is kind of out of the RBNZ's control because inflation is persisting in sectors less sensitive to the OCR. I want to ask you a question, and this may not be fair, but you try and navigate around it as you see fit. The Kiwi, the level of the Kiwi right now, how do you feel about it? Are you comfortable with it? Is it disadvantageous to growth and for exports?
Our fair value modelling of our exchange rate suggests that we're on the upper levels, slightly overpriced, but that is against a trade-weighted basket. And of course, that's using approximations. These are fair value, standard economic ways, purchasing power parities, stories. That's not the case across all currencies, of course. The US dollar is the one that is creating the volatility for everyone else, as per your story just prior. So, the exchange rate, globally exchange rates have been incredibly well behaved because we've been coming through extremely similar global economic shocks. It hasn't been one country versus another. It's been a global challenge, and so the relative exchange rates have been pretty benign. No, it's not a big factor in our forecasts. We deliberately draw more or less a straight line when we are projecting ahead for the currency because we control the interest rate, not the exchange rate, and we're targeting inflation, not the exchange rate.